Welcome back to the channel, the Daily Forex. So in today's video, I'm going to share with you guys how to trade Crash 500 index the right way, okay? Now, first and foremost, what we're going to do right here is to, first of all, we're going to be calculating the amount of lot size we're going to use for this trade entry. So for example, we're using a lot size of 0.5 right here. So, and a lot size of 0.2. So if you're using a lot size of 0.2, first, the amount of profit you'll be making for every candle tick for 1 minute, we are using the 1 minute time frame. For 1 minute, for every candle tick, you're going to be making 10 cents. All right. For the lot size of 0.5, we're going to be making 20 cents for each candle ticks. Now, this is where it comes in. Okay, this is where the trick comes in. So before you place an entry or before you carry out a trade session, what you should do is to, first of all, know the amount of profits and the amount of losses you are willing to make. Okay. Now, you should know the amount you are willing to risk in the market, and you should, plan the amount of profit you are going to make on that market, and there's also going to be a loss on that market as well. Okay, and the amount of lot size you use will also determine the profit and loss you will make, which is how big the profit will be and how big the loss will be. Okay, now this small lot size we are using is a good strategy for risk management technique. Okay, so let's say we are using a lot size now of about 0.2, or probably let's just go with 0.5, because 0.2 you're going to be making just 10 cents. So if you want to make a little bit more, we're going to be increasing the lot size to 0.5. So 0.5 lot size right here, that's what we're using. Now, if we buy the market right here, which we can't buy the market at this position, because if you take a look, the market just dropped in price movement. So like I said, we cannot place a buy at this point because the market is at the overbought position. So you can see that if I zoom a little bit right here, what we can see right now is that the market bought after 6 candlesticks from this point that I exited from this market. Okay, so I marked this point, which is here. I bought this market here and I exited at this point, just for you guys to see the position where the market is. And after about 6 candlesticks, the market dropped even after these two first buys, which is this first 2 candlesticks, which is the green lines. The market dropped a little bit, then it bought after 4 candlesticks, then it dropped again, and it was massive, guys. The drop was massive. So these are the things you need to watch out for when you're trading on the crash market. Now, we're using the lot size of 0.5. So imagine that you take about 5 candlesticks from the market. How much you are going to be making from that market? There's going to be, a good amount of profit from that point. So what you should do right here is to, calculate 0.20, which is about 20 cents. You calculate 20 cents right here times 4. Okay, 20 cents times 4, so it's going to give us 80 cents. So imagine that you take 4 candlesticks successfully. You gotten 4 candlesticks from a buy market on the crash market. You got 4 candlesticks successfully using a lot size of 0.5. okay, you'll be making 80 cents. That's almost about $1 from that market. So imagine you make $1 from a lot size of 0.5 every 5 minutes. $1 every 5 minutes. Imagine that for a day, you successfully gotten 5 candlesticks for every 5 minutes. You're going to make it $1. So imagine the amount of profit you're going to be making from that trade. Now, how do you make a 5 candlestick successfully from a crash market? I'm going to show you a strategy that you can use to make that candlestick. All right. Now, what we're going to do right here is, first, we're going to look at the market position. Okay, we're going to look at the market position right here at this point. Remember, 5 candlestick each for each trade entry with a lot size of 0.5. That's what we're going to be using right here. Now, first off, we zoom out of the market, taking a closer look at this market. Right here, the market is at the overbought position right here. So let's use this position as the overbought. So we're still seeing another drop in price movement. So we're going to be patient on the market. So another thing you want to jot down is patience. Okay, you want to get a list of book. want to get a book right here whereby you jot down the amount of lot size, you write down patience. You can write P as patient, you write down patient, okay, so that it will remind you that you need to be patient on the market, because trading requires patience if you want to win. If you're in a rush in the market, you're going to end up losing your trade and your money. So what we're doing right here is that we're going to place indicators on this trade. I'm going to show you how you can do that. Right now, we're going to add the RSI. Now, I got a comment recently for one of my videos. Someone asked me, what is the use of the RSI? Every time I'm showing you guys strategy sheets, I always tell you guys that the RSI, which is the relative strength index, is very useful on the trade. Okay, without the RSI, you can't use the MACD successfully, which is the MACD indicator. You can't use the stochastic oscillator successfully without the RSI. The RSI help you, see the level of the trade, which is probably when the level is at the overbought and the oversold position. It can make you see a closer look into the market. This RSI, that's if you know how to use it successfully. That's why I always tell most of the traders in my community, I always tell them that, for you to be able to have a successful trade, probably on the boom and crash market, you need to be trading this market consistently so that you'll be more familiar on the market. Okay, so while using the RSI indicator, we're going to put that on the trade chart right here. RSI period 14, you apply it to close. The level is going to be on 890 and the level of 10, which is the level of 90 is the overbought, level of 10 is the oversold position. Then for the 90, you put on sell. For the buy, you put on 10. I'm going to show you a strategy that you can make 5 candlesticks successfully. The style is on 4 pixels, just as you can see right here on my screen. Then you click on done. The style right here, you put it on 4 pixels, the color on blue. All right, or you can use any color of your choice as long as you know what you're doing on the market. All right, so like I said, guys, take a look. I told you right here at this point, remember this was the first sold, right? The market bought a little bit and there was another sell entry, right? Take a look at that. The market dropped in price movement. Okay, now what we do right here is to add in the MACD. Remember that it doesn't matter the strategy you are using as long as you know what you are doing on the market. Okay, this strategy is going to show you guys how to always be successful and get that 5 candlesticks and make profit on your market. Imagine you are patient on the market and you in a day using a smaller account, you are able to make up to $50. That's going to be great, isn't it? Yes, that's going to be a great that's going to be a great trading. So we're going to add the MACD indicator right here on fast EMA 14, just as you can see right here on my screen. Slow EMA 24, MACD SMA going to be on 10, the main color on black 4 pixels, the signal on red on 4 pixels. Click on done. All right, now what we're going to do now, before we confirm our entry, we're going to check the 1 hour time frame. We're going to zoom in a little bit. So I'll zoom in a little bit right here. We can see that the market bought for a long period of time. So what's going to be the next step? Is a sell. Is it is the market is going to sell, just as we are seeing on the 1 minute time frame. Although the market is buying, then it sold, all right, and the market is highly volatile. If you see a market condition like this, whereby the market is as bought, know that the market is going to sell. Okay, so what is the position you want to wait for? Okay, this is where the patience come in. What you want to wait for is when the market have sold. You look for a position or an opportunity whereby the market has sold for a long period of time and the next step is for a buy. That's where you go into the market and you place a buy for each 5 candlesticks. And even though the market's trend is showing you a signal for a buy, it doesn't mean that the market won't drop in price movement. The market can still drop in price movement, resulting in a loss in your trade. That's why you need to be extremely careful on the market, and you need to always pay attention on those indicators giving you those signal for where there's a possibility that the market could drop in price movement. All right, now you can see this is the position you want to watch out for, where the market has dropped. then you find an opportunity where the market is buying, then you go back to the 1 minute time frame and you place your entry for a buy. Then the MACD indicator, you can see that when it gets to the level of 90 right here, the market would spike. It got to the level of 90, the next candle line was a huge drop in price movement. Okay, take a look at that. That's a huge drop in price movement. And when it gets to this level, probably level of 10, you can see at this point the market didn't get to the level of 10 here and continue to buy. But when it gets to this level of 10 right here, the market will start giving you a signal for a buy. You start going upwards, just you can see right here. At this point it start going upwards, just you can see right here. And every first, be very careful if you are on the market and you saw that the MACD start creating an upward trend during the first trend lines, there's a possibility that the market would spike. Just you see right here, the market spiked. So there's always a possibility that the market would spike. So what you do is to wait probably after 2 candle ticks. After the first one, the second one, then you place a buy. And before you place a buy, you want to make sure that the market is at the oversold position, not at the overbought. Do not place a buy whenever the market is at the overbought position, because there's a higher chance the market will drop in price movement. So probably you want to place your buy at this point, at this region on the market, probably below this position. You want to place your buy below this position right here. This is where you want to place your buy entry. Do not go above placing the buy, because there's a higher chance the market could drop. But if you have a bigger account, you could take that risk if you want to. If you have probably an account of $1,000, $500, you can, hold on to the market. But this strategy is for people that have probably $100 accounts and they want to grow their account. If you have a $50 account, you want to grow your account, you could place a buy using a lot size of 0.5, taking 5 candlesticks each from each trade entries. And from that 5 candlesticks, it will give you a profit of 20 cents for every 1 minute. And for 5 minutes, you get a total profit of $1 from that market for every 5 candlesticks. So you want to wait for an opportunity whereby you could place an entry and get 5 successful candlesticks successfully. So you don't need to take these 5 candlesticks straight up. You could take 2 candlesticks each from each good opportunity. After taking 2 candlesticks, then you wait again for another opportunity. You place a buy for 2 candlesticks. You wait again for another opportunity. You place a buy for 2 candlesticks, scalping the market and making a good amount of profit from that market. If you continue like that, in a day, you would have made over about $50. Okay, I've done this strategy and it works. I follow this method and it works. And I have, close friends that have done the same strategy that has worked for them as well. They are taking advantage of small price movement, taking about 2 candlesticks each from each trade entries for each good opportunity, taking it like that. Some people might say that this is not the best way to trade, but I tell you, this is a good strategy if you want to grow your account. Remember, trading is a journey and making profit is part of that journey as well. Okay, so you want to manage your capital by any means possible. You want to manage your capital and you want to stay away from higher risk on the market. Okay, so you place a buy for 2 candlesticks, taking 2 candlesticks each until it gets to 5. So if you take 2 candlesticks from the market for every 20 minutes, 2 candlesticks for every 20 minutes, taking about 2 candlesticks, probably let's say 10 minutes for 2 candlesticks, then you wait for another good opportunity after 10 minutes. In a day, if you calculate $1, let's say you make $1 for probably about 30 minutes, you make $1 for every 30 minutes. In a day, you're making a good amount of profit on the market, considering the fact that you are not losing your trade. Okay, so what are the key points with this video that I just shared with you? Number 1, calculate your lot size. Many traders enter into the market without calculating their lot size. Calculate your lot size, plan your strategy, the kind of strategy you want to use, the indicators which you want to use for your trade. Okay, you need to write that down. Trading is a business, okay? Trading is a business. You don't just, start trading without proper planning. You need to plan your trade before you start trading, okay? So I hope you found value in this video. Don't forget to like and subscribe to this channel, The Daily Forex, for more awesome trading tips and strategies. I'll see you guys on the next video.